Good morning and welcome to another daily market report brought to you by Mike Bjork. Today is Tuesday, March 2nd or March 1st, excuse me there. And just want to keep this short and sweet for you folks because there's not a lot on the economic table today, so we'll keep it short and sweet. So let's start off with the economic news releases. First one will be the ISM, the manufacturing went up a little bit. As we mentioned, manufacturing has been fairly strong throughout the recessionary period, so no huge surprise there. Construction spending down again, so again, not too much surprising, as a lot of people don't really want to start something where, because we don't have the growth really to support it as of yet. So as a result, we have the stock market down a little bit. Bernanke is testifying before Congress this morning, so one of the news items that were being mentioned on there is that commodity prices have gone up, and we may see some near-term inflationary, or at least headline inflationary. But if you take out the volatility of the food and gasoline prices and stuff, energy, our core should probably be okay for the time being. But right now, that's some of the news items that was of note. So that's the headline inflation when you see that in the media. So let's take a look here at the bond market. We did have a drop down. We touched the 102 mark roughly yesterday, which is good. As we kind of mentioned, this could be the area where we could see a little bit of sideways movement before we go upwards. As we mentioned before, this range here was kind of tougher, so it could be we could be here in a sideways range, and then before we get up, see to kind of bump upwards. As a friend of mine, Dan Rowich, who is a former trader, kind of informed us earlier. So, and a lot of times he's right here. So, but we did have a drop down, and over time, I think you'll see it coming up. It was even down -6 this morning, and it looks like it's gaining a little bit of steam. So, but he thinks we'll probably trade range for the next few days at least between the 101.50 and the 102 mark. So we may see that for a few days until we gain enough steam and pop above the 102 mark and for long-term growth there. So he's still a little bit bullish on the bond market right now. All right, folks, so as a result, the rates are a little bit lower today. If it gains a little bit more steam, it's possible we could have a little bit of price improvement later on. So we'll keep an eye on that. But right now, the rates are a little bit lower than what they were yesterday. As we can see, the bond market here was a little bit of a drop here as we closed yesterday at 101.88, right now at 101.75. So, all right, folks, have a great day.